Hello, I'm Sarah Allen and welcome to The Pitch. Today I'm joined by John Stover from Tribeca Investment Partners and we're going to talk about Asian credit. Think you know Asian credit? Think again. John, welcome.
Thank you.
So to begin with, in a nutshell, and this is a hard one, what is the Asian credit universe?
Sure. So a lot of people in Australia think it's a bit of a niche market, but Asia credit's actually a $34 trillion US dollar market. And even just the US corporate credit market is about $1.8 trillion US dollars. And so that's about the size of the Australian equity market, for instance. So it's a big market for us to invest in. And we do look across the space. Predominantly, we're doing US dollar bonds, but we do look at local currency as well. There's fixed rate debt, there's floating debt, there's corporate, there's sovereign. And it's pretty well diversified across the region. So we do a lot of investing in India, Southeast Asia, and Australia. Those are our major exposures. We also look at Japan and Korea, and less so China.
Okay, so it's grown at quite an extraordinary pace since 2009. What's been the driver behind this?
It's the growth of the region, really. If you look at Asia, obviously it's growing more rapidly economically than what you see in the rest of the world. And at the same time, the corporate bond market is much smaller than you see as a percentage of GDP relative to other regions. So actually the Asia Pacific sovereign bond market is larger than the US, which I think is something that surprises a lot of people. The corporate bond market is about 30% of the size of the US. So again, the market, the GDP is growing more rapidly in Asia, and then the corporate bond market, just as a percent of GDP, has a long way to catch up. So that's really been the main driver of growth that we've seen over the past 10 to 15 years.
Okay, so Australia, Indonesia, and India are bigger exposures than China. Why is this?
Yeah, so I think India and Indonesia are often overlooked when people from outside the region are looking in. And these have two things that I think are really important going forward for the countries economically and from a market's perspective. Number one, they both have great demographics. So, relative to some of the issues that you're seeing on demographics in Northern Asia, Japan, China, for instance, India and Indonesia are going to have stronger demographics over the next 5 to 10 years, and they have growing middle classes, which is really going to be a boost to the economy. Number two, they're much more stable politically than they have been over the past few decades. Both have elections coming up. We don't think the elections are really going to be major moves one way or the other in terms of what's happening from a business landscape economically. We think the policies that the administrations currently are undertaking are going to continue even after the next election. So yeah, we think they're going to be, again, great demographics, politically stable, and Asia, that's a big part of what you need to have for a country to do well economically. Australia, look, that's been again also an overlooked part of the market because you have Asia funds who historically have done only Asia and not Australia, and then you have developed market funds that do just the US or just do Europe. And so Australia in some cases can be a bit of an orphan in the credit market. But so that's always been a sort of source of alpha generation and opportunities for us because we really do have a strong team of analysts here covering the companies day to day. And what we're seeing is with this new index that most of the new funds are going to be benchmarked off of, which is the JP Morgan Asia Pacific Credit Index, that's going to increase the flow of funds into Australian credits, and so that's going to give a kicker on the returns from some of the bonds that we own today.
Okay, so you look for mispricing in the market. What opportunities are you seeing out at the moment?
Yeah, so we like, right now, I think Indian renewables is one of our larger exposures. That's a market they produce solar and wind power, very stable business profiles. They have really strong major equity shareholders. So Greenco, for instance, is our biggest exposure in the space. That's a majority owned by GIC, which is the Singapore Sovereign Wealth Fund. Those have moved from about 3 to 4% yields to about 12 to 14% yields a year ago. Those have come in a bit, but I think are really strong safe carry right now at about 8 to 10% yields. We also really like what's happening in Indonesia. We have some exposure there, both in the natural resources space and the property space. And in terms of what we're seeing as a thematic across the region, what we're seeing is really on the corporate buyback side. So what's happening there is a lot of the companies are using their free cash flow or they're tapping into bank loans that are secured by their assets, and they're buying back their cheap bonds. And that's really what we've been trying to get in front of is a lot of these companies doing buybacks of their own bonds, just like you would a buyback of a stock on market. And that can move the market price of the bond up by 5, 10, 15 points. Japan is also really interesting right now. It's undergoing really once in a lifetime corporate governance and shareholder return story. So companies are much more focused on corporate profits versus just increasing employment like they have been historically. And so that's been a real positive for corporate profits and cash flows, and been a positive credit quality that we've seen.
Okay, thank you so much for that deep dive today, John. If you've enjoyed this interview, please subscribe to Livewire's YouTube channel. Thank you for watching.